Welcome back to another video, everybody. So in this one, I have a very informative video to bring all of you guys this afternoon. So not only are we going to be recapping one of the trades that we called out for you guys on this channel over this last week, but I also have some really awesome trading tips and tricks for you guys, especially for those of you guys that do have a 9-to-5 job. I know some of you guys may be thinking, well, I can't really sit at the screen all day long and kind of watch these trades flicker around on the 5-minute or even the 3-minute or the 1-minute time frame. You just can't do that with your job. There is something out there for you guys. You can definitely take advantage of all of these awesome moves in the market, and I'm going to show you exactly how. So before we get into all of that information, guys, if you wouldn't mind dropping a like down below and subscribe if you guys do want to see more videos like this. So first, we kind of have to define exactly what we are doing here. Most of these trades are going to be coming from a couple of our algorithms that we have in our group. The first one right here is going to be Trader Joe, and as you guys can see here, this algorithm is up about 17% in a couple of months that it's been out trading. Now, the trades that we're going to be talking about in this video here come from the predictive alerts, what we like to call Pythagoras. Now, as you guys can see here, there are a lot of different alerts getting flown around all day long. We only really have time to talk about a couple of these every single day. So if you guys do want access to more of these, make sure you check out that link down below. These algorithms are incredibly powerful, as I've shown you guys before, and I'm going to show you guys again in this video here. But the trade that we are going to be talking about here is eBay. Now, we did bring this up. We did get this predictive cross alert on the 22nd. Now, we see here eBay daily cross down in 7 bars, meaning that our algorithms here are predicting a 1348 cross on the daily time frame to happen within the next 7 days. Well, that's a long time frame. You're front running by a pretty significant amount. Now, we've gone over this a couple of times in the past, which we are going to reference when we actually start talking about this trade here. But when you're trading on the daily time frame, you want to be getting a lot more time on your options positions if you want to be trading options. Again, if you want to be trading these alerts or front running them with the predictives, you can also just trade shares if that's something that you are more comfortable with. But we can see here that eBay was alerted on this candle the 22nd. I actually entered the day after we made a video about this. Now, overall, you guys kind of knew my overall expectation for the market was that it was going to come down. We were going into Jackson Hole. There was a lot of uncertainty, and what I ended up buying here was these eBay $45 puts for October. Now, you might be asking me here, well, why did you go out so far in time to expiration if you could have gone to around September? Now, the main reason why you want to get more time, and again, when I'm trading these predictive alerts, when we say a minimum of 1 month out in time, that is the bare minimum. I like to go for 2 months out to really lessen the volatility of the intraday swings that we are going to be seeing. I harp on this a lot, but it is incredibly important to having success in the market for 2 reasons. 1, you are limiting those volatile moves in the market, and 2, if you are going to see a long drawn out move and a continuation and a trend start to develop in the market, options have an expiration date. After that expiration date happens, you no longer have any exposure to that stock. So you want to be able to give yourself enough time to, again, not only decrease the volatility of the position that you have, but also to be able to capture that full move. But looking at this trade here, entering somewhere on this candle here, you do see that eBay gets a little bit of volatility here before a nasty red candle to the downside. Now, when we look at our indicators here, we have the RSI below 50, below its moving average. The MACD is showing bearish momentum here as well, and the shaft trend cycle is also signaling sell. When we're looking at these key support and resistance level here, eBay was kind of flirting with this key resistance level that was turning into new support, ended up coming back above, and then breaking this on the downside. Now, a couple of downside targets right now, if you guys are actually in this trade, right down here, right around $43.25, if the market wants to continue to sell off a little bit, and then we have those deeper lows at around $40.50. Now, with the volatility that you saw on eBay and a lot of other stocks going into Jackson Hole, more time on these contracts and knowing how to follow your rule system is going to really take you in the right direction. It takes your own emotions out of it. Why do you think that our algorithms, Trader Joe and Pythagoras, are able to have so much success all the time in these markets? They have a specific set of rules that they are following. and they are not deviating from that set of rules. There is no emotion. When you are trading, most of the time you are really not trading against the market. You're trading against yourself and your own emotional kind of predisposition in what you are going to be reacting to based on what you see in the market. If you tend to get scared out of positions early, more time is going to help you a lot. But following that very specific set of rule system that we are teaching you guys every single day in the group is going to take you very, very, very far. Now, there's another aspect of these trades on the daily time frame, especially for those of you guys with 9 to 5s, that I think is a very, very helpful tip. Now, what we're going to do here is we're going to go to the 5-minute chart, and then we're going to go all the way back to the 23rd, which is going to be right here. So if we zoom in on the chart of the 23rd, when I actually took this trade here, you can see that eBay is having a decent amount of volatility throughout the day. You see it start to rip it open. I'm not in this trade yet. Remember, this is the day that it was called out. The price open, or the market opens. You see eBay start to spike up. But again, for you day traders out there that have been with us for a while, you guys know we have Invictus, the predictive algorithm, very similar to Pythagoras on the 5-minute. Now, Invictus starts alerting over here. Now, in order to properly time your entry, if you're looking at a given stock on the 5-minute time frame, well, you can time your entry pretty well if you are using a 5-minute entry. If you start to see this stock crossing down below the 200 EMA on the 5-minute time frame, well, again, that is going to set yourselves up to maybe even be green on the position, and significantly green on the position, before the market even closes that day. You could potentially come back to your position. Look, you're already up 10%, and if that's all you're looking for out of the position, well, you just traded a contract with a significant amount of time, lowering your risk, and you were out that day. Now, again, you can hold these contracts out very similarly to what I've done here, and you can ride out the bulk of this move. Now, again, we also like to talk about taking profits as well. So I've actually taken a decent amount of profits out of this position right now, and I'm currently letting it ride to see what is going to happen in the overall market. But again, I'm going to be watching these key indicators here. What is the RSI telling me? What is the MACD telling me? What is the shaft trend cycle telling me in this trade right here? What indication of momentum is this chart giving me at this time? So this is kind of the little recap that we had here for this eBay trade, but I do want to kind of wrap this up for you guys in a nice little bow for those of you guys that are new and aren't necessarily in there with us yet, but are curious, to kind of give you guys some pointers and tips and tricks going forward, because we are going to continue calling out trades like this mostly every single day on this channel. So coming over to this very, very quick note sheet that I prepared for you guys, more time on your contracts. The market is so volatile right now that you are subjecting yourself to pretty significant overnight moves, gap ups or gaps down. Now, whether or not you're playing puts or calls on your position, whatever analysis that you are doing, if the chart looks like it's going to send the stock up or send the stock down, well, you could wake up one morning, if you're only trading 2 weeks out in time, 3 weeks out in time, maybe even a month sometimes, and get stopped out very quick. Getting more time than you think you need is going to help you so much, not only with being able to lessen the volatility and kind of being able to capture those full moves, but you can almost kind of set the trade out there, let it ride, and you're really not going to have to do much with it, especially if you can check back in every once in a while and follow your rules. And that's where it takes us to acting like a robot. Our algorithms, Pythagoras and Trader Joe, are so successful. They are the best tools that retail investors have at the current time right now. And the reason why they are so successful is that they are not emotionally tied to any positions. If they see the momentum change, they're out. If they see the momentum continuing, well, they're going to stay in the position and entering the position. Again, Pythagoras is front running. He's predicting these crosses on the daily time frame, and Trader Joe is actually playing the crosses with all of the 1348 rules that we outlined for you guys in the curriculum, in the live streams, every single day. So guys, that is going to wrap up this video here. If you guys did enjoy the information and analysis that I provided for you guys in this video, make sure you guys go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And again, guys, there's so much opportunity out there in the market right now. It's up to you to decide whether or not you want to go out and take it. So that's going to wrap up this one, guys. Hopefully you have a great weekend. Peace.